Traders today have to be very aware of what's going on around the world and not just in the United States. Our guest today is Todd Gordon to talk about specifically Europe. Todd, thanks for being here.
Hey, Tim, nice to be here.
Well, lots of news coming out of the Eurozone and currencies and how it's affecting those. Can you talk about that?
Yeah, as you said, as a stock trader, you need to be very much aware of what's going on in Europe. And even one step further than that, what's going on in the European currency. There's been a relationship since 2008 where the stock market goes, the euro goes. And I'm not just talking about European stock markets around the world. So if stock markets around the world are rising, you're going to see the European currency moving higher against the US dollar. You'll see the US dollar moving lower. So there's been a very nice inverse relationship. As Europe continues to move down the path, as we discover how deep and far-reaching the debt crisis are in the peripheral Euro countries, you're seeing global stock markets react to the downside. So that's confirming that as things get worse in the European peripheral, you're seeing the euro currency suffer. As things get better, as every subsequent bailout from the EU and the IMF comes into these peripheral countries, you're seeing the European currency bounce, which is bringing global stock markets up. So recently we've seen a big fear of contagion going to the larger economy, Spain, which is still in the European peripheral and is still in a lot of trouble with the debt crisis. So you're seeing, as Ireland was recently just supported by the IMF and the EU, there was fear that if they weren't supported, there would be a huge spillover into those European peripheral countries. Now, the way we're playing that right now is actually because the euro is trading, obviously, based on everything that's going on in Europe. But sterling is the real interesting currency here. What's going on is the UK economy has a huge percent of their GDP in exposure to these European peripheral countries. So as the likeliness for a bailout from the countries that the UK is exposed to, the strength is actually shown in the sterling more so than the euro. I believe it's 15% of the UK GDP is tied up in exposure to the peripheral countries in the EU. So as write-downs become more possible, as debt destruction or debt rollover becomes possible, the UK faces a big hit to their GDP, so the sterling is going to weaken. So actually, a trade we have on right now is to take advantage of that, which is actually long sterling, because it looks like the IMF and the EU are going to be there to support Spain, Ireland, Portugal, and Greece. So the sterling currency is actually going to benefit. So we have a position on right now that is short the euro versus the sterling, which would benefit in a bailout.
Now, with so much news coming out every day, it seems like one day, bad news, the stock market goes down. Yeah. Next day, everything's seeming rosy again. The volatility seems to be picking up here a little bit. Does that concern you, or do you like that? I
like that. And actually, as a trader, the first step is to identify what people believe should be happening. You need to understand the fundamentals and what people believe the implications of those fundamentals are. But then you really got to look at what the major players in the world are.